Sullivan and Cromwell is so corrupt that they're going to want this case to go faster so that they don't get examined too closely. And I think all FTX customer creditors should be entitled to an extra 25% fraud claim against FTX, which would increase the maximum payout from 100% to 125%. All of these bankruptcies come from this GBTC trade. Like, this GBTC trade is the original sin of this cycle in crypto. The bankruptcy system is based on pretty, I don't want to use the corrupt word, but it just feels like the left hand is shaking the right hand this whole time. The only winners are the lawyers. So there's a few things I would love to talk to you about. I think we need to talk about petition date pricing because there's still a lot of agitation on Twitter about it. It's super relevant. It's one of the most important things in the bankruptcy, the most important decision. And the problem is there's not really any good alternatives. And a lot of people have been suggesting some alternatives, but I don't see them as viable. And we should talk about today's letter. It's pretty amazing. A Third Circuit court overturned previous rulings, and FTX now has a proper examiner sent by Sullivan and Cromwell, essentially details why Sullivan and Cromwell did not want an independent examiner. I don't know if they have a point or not, and whether they're just trying to hide any wrongdoing. As a reminder, Sullivan and Cromwell were quite an odd choice to be representing FTX in bankruptcy, given that they were FTX's lawyers pre-bankruptcy. And what happened was Sullivan and Cromwell convinced Sam Bankman-Fried to put FTX into bankruptcy and to appoint John Ray III, a very experienced attorney, as CEO of FTX. Once John Ray III was appointed CEO of FTX by Sam Bankman-Fried in his Chapter 11 filing, John Ray then appointed Sullivan and Cromwell right back in charge of the bankruptcy, and they have been charging hundreds of millions of dollars in fees. It's crazy.
That seems like it could be kind of suspicious, just how you laid that out. What do you think? Do you think there's some weird shenanigans?
I think that bankruptcy, like everything else in the United States, is an industry. I think this is part of the bankruptcy industrial complex that I've come to learn and not love. And the entire system in Wilmington in Delaware is geared so that these law firms can charge immense fees. It looks like to me that there's some form of revolving door between all the law firms, between all these advisories, and they go between working for the government and the judiciary to going back to these law firms. End of the day, I have very low expectations from this examiner.
So you think this examiner is actually a part of this revolving door or this revolving cycle between the law firms and the government officials and et cetera?
Well, in the end, the examiner is under the authority of the judge. And the judge, I think, is a good judge, an honest judge. But he lives within a universe and a system that is this revolving door. I mean, it just is what it is. They've charged $700 million in fees already.
The U.S. trustee, would you say that they are the ones that are outside of this system?
Nobody's outside of the system. Everybody is in it. That's somewhat the problem. And I'm not saying that we should all engage in some kind of Bolshevik revolution and create a new system. The U.S. trustee has been putting up a good fight for a lot of positive things, but also a lot of things that didn't make sense to me. And in the end, funnily enough, I think Sullivan and Cromwell is so corrupt that they're going to want this case to go faster so that they don't get examined too closely. And it might be in the interest of creditors that happen.
Do you think them wanting this case to go faster does kind of connect to them wanting to just quickly value all the digital assets in a way that may not be, or I'm curious, do you think there's a connection? Because I saw some of these objections to how they're valuing digital assets and the liquidation discount is like they're trying to rush things really, really quickly through the process.
I think it is connected. But having said that, all of the objections that I've seen on the valuation of digital assets are based on emotional reaction. And caveat, I really think it is the right thing to do is to object. But the reality is no one has put forth any good legal arguments and no one has put forth any good other alternative. Like no one is saying, hey, this date makes sense because of XYZ, because it is somewhat impossible to find that date. Only date that really makes sense is petition date.
What are your thoughts on this additional liquidation discount? Because from my understanding, and correct me if I'm wrong, because I totally could be wrong here, they didn't liquidate everything on the day that they're saying the liquidation discount should apply. Like they're selling now.
The liquidation discount is funny because you can see the unfairness in it immediately. The unfairness is in they're putting very low values to a lot of tokens that have no value. You know, if you had $1 billion worth of Happy Dappy coin and there's $1 of liquidity of Happy Dappy coin, it would be unfair to give you $1 billion claim. I think you would agree to that, right? The methodology that they used, I think, is actually pretty fair, where they look at the liquidity on honest exchanges and they have like a whole ranking of exchanges. You know, they rank Kraken at the top, then it's Coinbase, and they just say, hey, could you have sold at petition date on these exchanges? What would it have looked like? What's the slippage? What's interesting is that they put close to ridiculously low discount on Serum and Locked Serum. You're telling me you could sell that Locked Serum? It's zero, my guy. And they put it at 10 cents. Why is that? It's because a lot of the members of the UCC have a bunch of Locked Serum tokens and Serum tokens. Positive that that is the reason. It seems dishonest. Now, I have a personal view as to what the solution for all creditors should be. And I think all FTX customer creditors should be entitled to an extra 25% fraud claim against FTX, which would increase the maximum payout from 100% to 125%. There's a lot of legal precedent here. Celsius, you're a Celsius creditor. You got an extra 5%, right? Your claim was boosted. On paper, it doesn't make sense really for Celsius, because you were like, if everybody gets a 5% boost, then no one gets one, right? But there are other creditors below you in the waterfall, and you're taking from them. And in the Celsius case, that is the Federal Trade Commission that exerted like, I don't know, $4 billion fine or something. So you don't really want your money going there. How many people panic sold their crypto to try and get their money out of FTX? It's chaos out there. You can argue whatever you want. And I don't think we should be pitting clients against each other. Like, full disclosure, I have both crypto and USD in my claim. So like, it's somewhat the same to me, but I would make a lot more money if they valued crypto prices higher, for sure.
I guess it's the only thing fair, or it's just what bankruptcies have to do is value things at petition. But there are some coins, and I think I mentioned in one of a video a little bit ago, that have actually gone tremendously down since the petition. Yeah. Which I find hilarious. They're going to just be made like 100% whole.
Exactly.
Yeah.
And it is what it is. An argument is to do, hey, Genesis started giving, you know, in the plan for Genesis, they're giving people their coins in kind back. The problem with FTX is the coins aren't there. It's not like, oh, 25% of the coins are gone. We're going to give you 75% of your coins back and then a claim. There were never any of the coins in the first place. It was a fucking mess. You know, crime scene, there's no coins, and you have to deal with that. And you think the judge is going to tell the bankruptcy estate, now you have to buy back all the crypto that you sold painstakingly? Doesn't make sense.
It sounds like this 25% claim may really impact creditor recoveries, especially if creditors...
It protects us from the rug pull scenario. The rug pull scenario, as coined by Simon Dixon, he alerted me to that in Celsius, is if you get to 100% recovery on your dollarized claim amount as of the petition date, any excess in dollars goes to the US government in that case. So in Bitcoin terms, you're significantly worse off. This extra 25% gives us a buffer so that we have more time, if crypto keeps rallying, to get out of Chapter 11 and get our dollars back, because we're not getting any crypto back, before, you know, they can give 100% of value back to creditors. And then, oh, there was an extra 25% in the VC portfolio. Well, actually, that's going to the IRS. It's going to shareholders, or it's going to pay a big fine. All of those scenarios are imaginable, and we really want to avoid that. If we get 125% recovery, that would be a pretty good outcome for this case.
Given all the facts, given the fact that they literally don't have the crypto and all these objections are emotional and not really based in reality, I would agree with you.
I mean, look, where we were a year ago, if you told me a year ago this is going to be a 100% repay case, I would have said you are crazy. The luck in this case is unbelievable. One, the debtors have been very, very, very good at dealing with a lot of assets after their mistake with selling the early crypto projects, the SUI tokens. You remember that? They made like a $300 million mistake. And after that, they were incredibly diligent with the way they liquidated assets. So I do give them a 6 out of 10 on that.
Yeah, a lot of it's market timing. A lot of it's just luck.
The luck has been really favorable. Like, you know, obviously Solana is up 850%.
We just got news they think they sold $1 billion or so of GBTC. I heard you talk about GBTC and your thoughts on that in a video you posted on your X/Twitter page. Yeah. What are your thoughts? I'm just kind of curious on the whole GBTC mess. So I want to take a quick pause from the video with Louis to talk about the sponsor of this video, which is Claims Market. So Claims Market is an online marketplace for buying and selling FTX claims. If I zoom in right here, you can see that the current prices for claims have never been higher. And here are the latest transactions. You can see when they were listed and when they were sold. And you can see these are hundreds of thousands of dollars, if not $1 million claims. So the process for selling your claim is very, very simple with Claims Market. On their website, which I'll include below, there is an explainer video which shows you exactly how the process works. If you click agreements on the top, you can see all the documents that you would need to sign if you decide to sell your claim with Claims Market. I've personally known the guys at Claims Market for a very long time. They are incredibly professional, and the process to sell your claim is really, really seamless. And I nor anybody will tell you to sell your claim, but having the option to sell your claim, I think, is very, very important. You may be just tired of the bankruptcy process. You may need liquidity or money right now, and you just don't want to wait months, if not years, to get that back from FTX. So if you have any interest in selling your claim and you want to inquire about that, I will include the Claims Market website below for you guys in the video description. And now let's get back to the video with Louis.
So GBTC itself was, for me, the flag of the previous cycle and was really the center of bad behavior. I don't want to be a tinfoil hat person, but in a way, the SEC rules caused a lot of the problems. All of these bankruptcies come from this GBTC trade. Like, this GBTC trade is the original sin of this cycle in crypto. So I don't know if you remember, but GBTC used to trade at a big premium to the Bitcoin that was in the trust. And that was because marketing reasons. They were marketing the trust well. People were buying it. Who knows, right? There was no easy way to get exposure to Bitcoin for a lot of people. I wonder if there wasn't, I have a little bit of a conspiracy theory around that, if insiders of Genesis were not involved in that. But the digital currency group owned Grayscale, and they also owned Genesis. And so what Genesis did is that they said, look, if you want to do the GBTC arb trade, that is buy Bitcoin and put it into the Grayscale Bitcoin Trust, wait 12 months, we'll give you the GBTC shares, and then you can sell them and pocket the difference. And the difference was, you know, on average, 40%, whatever. We could even show people the graph. It was around 35%, 40% at times. And so if you levered that, if you borrowed a ton of money from Genesis to buy Bitcoin, or you were just borrowing Bitcoin from Genesis, putting it into Grayscale and doing that in a loop, you were making a ton of money, 300% returns, 200% returns, which is huge. As soon as the trade started unraveling, when the discount, the premium became a discount, if you're 10x levered, your losses are huge. At a 10% discount, you've lost all your money. At a 20% discount, you've lost twice what you put in. Where was the money coming from to do that? Where was the Bitcoin coming from? It was coming from Celsius. That was your Bitcoin. Who was doing that trade in scale? There were small funds like mine. We looked at doing that. And then there were bigger funds like Three Arrows Capital and Alameda Research, who were doing this trade borrowing Bitcoin from Celsius.
And had they approved a spot Bitcoin ETF,
this would have not existed. The reason why this wouldn't have existed in the ETP, the grayscale GBTC ETP, you couldn't withdraw Bitcoin. So once the Bitcoin was in there, it was in there permanently. So you couldn't narrow the gap. You couldn't get rid of that spread. And as soon as it was converted to an ETF, that spread was arbitraged out. And FTX, which had 22 million grayscale Bitcoin Trust shares, sold them because that was just a legacy from them doing the trade.
Yeah, that's probably why the price of Bitcoin is a little down right now.
And because that's just a hangover from the last cycle. Good on John Ray for he initially sued Grayscale for holding on to, it was initially a $500 million position that he could have liquidated with the discount was 50%. That's good. That's good. Maybe we can go to this document. There's some bangers in here. Essentially, what they're doing here is they're saying, look, we now know that you're appointing this examiner and we're not going to fight it anymore. They now say they're disappointed. The debtors are disappointed and disagree with the Third Circuit's view that they need to be an examiner. And then they go on to say, look, we've done such a good job in this case. We've done all these great things. And we expect to try and take FTX out of Chapter 11 by mid-year.
What do you think about that? Mid-year out of Chapter 11? Do you think that's a little bit
I think that is puffery, as Simon Dixon would have said. That just doesn't sound like a real possibility to me. And then they say on the hearing that's scheduled for the 31st of January, which is the same hearing at which the judge is supposed to approve the order of valuing claims at petition date prices, they are going to then offer the potential percent recoveries in the case. Now, this seems also unrealistic to me because how can you give out percentage recoveries if you don't have an approved denominator, if you don't have an approved claim?
Well, also, isn't the whole IRS thing still up in the air as well? And I believe that
Totally.
hearings in March. I forgot the exact date.
Yes, I think it's March 28th. Yeah, the same as Sam's sentencing. I think actually it's a odd coincidence. So it is possible that they are going to give a draft on January 31st, and we can speculate on what that number is going to look like. And I could be right or wrong. You want to take an over and under on this, on how much they offer to give back as an initial distribution?
Let's say they say by the end of this year. Well, we don't have to do a time frame. I'll say 85.
I'll take the under on that.
Okay, what do you think?
I think 45.
Is that because they may say the thing with the IRS is still being worked out? They may use some excuses to lower it. Okay.
It gives them more opportunity to pay themselves. I think the IRS will try and block it as well, which they're well within their rights to. They're going to say, no, we haven't resolved this. So all of this seems to me quite ambitious. And one of the conclusions of this document is another thing that could delay this payment is the examiner.
Didn't they say that they shouldn't delay any distributions? But what do you think that's puffery?
I don't think that's puffery, and actually it's more the judge's role. The judge is the person who really is going to be able to accelerate things at this rate, just like in the Celsius case. Look how long it's taken since we voted on the plan and the plan was approved. How long has that taken? Months. I can't even remember when that was. That was what, May? It was before the summer, it feels.
But you think that in general, the judge and Sullivan Cromwell do want to speed this up?
Yes. Well, I actually think Sullivan and Cromwell have a lot of incentives to move incredibly fast in this case. I've never met anybody from Sullivan and Cromwell. I have a tendency to meet people and think they're all nice guys, so I'm not a very good judge of character, but they've made an absurd amount of money from my perspective. I grew up in a somewhat privileged background in France. These are amounts of money no one makes in a lifetime in a country like France. Hundreds of millions of dollars. It's absurd. You're charging for your time in a bankruptcy case that's not even gone that well. A lot of things that are unanswered in this letter that give me pause and stress. I think the biggest stress for me is you've never done this because you're a U.S. citizen, but you filled in as a U.S. citizen a W-9 form. So it is the law in the United States that whenever someone pays you over $10,000, that you have to fill in a W-9 if you're a U.S. citizen. And they can waive that W-9 to the IRS. If you're a non-U.S. person, you have to fill in what's called a W-8 Ben form. And in theory, so I have worked in fund management. I have dealt with this. If you are a non-US person receiving payments, whether you owe taxes or not, if they are in cash, not in kind, you need to do a tax withholding if you're the person doing the payment. And so when we had dividends, we had to do withholding for our non-US limited partners. And when we had a cash distribution, a sale of assets, even at a loss, we had to do a withhold. You can get the money back later. But I find the silence of the estate on this very scary. And in the Celsius case, that wasn't applicable because nobody's getting US dollar distributions. And in this letter, they're saying, they're going over point by point, right? Here they say current context, the crypto industry was terrible. John Ray said this whole thing was terrible. And then here are the John Ray's objectives. And in no part of this letter do they mention this withholding, which is going to impact 90% of the creditors, if not more, who are non-US. Can't wait to figure that one out. They talk about how much work they had to do, how Sam was going on TV, and that was helpful, not helpful for them. And look, and here after the Chapter 11 filing, so December 21st, 2022, remember, FTX filed on November 11th. The debtors filed a motion to retain Sullivan and Cromwell. That's the proof right there of what I was saying earlier.
Just how quickly they retained Sullivan and Cromwell after the bankruptcy?
Yeah, 1 month and 10 days. And then the U.S. trustee filed a motion and an objection, and the bankruptcy industrial complex just kept rolling in.
So do you think that the debtors or Sullivan and Cromwell are scared of what an independent examiner could find that would otherwise not be discovered or made public?
Yes, I suspect so. But given the scale of the obvious egregiousness of this, I can't imagine what it is. You have the lawyer who's in charge of this case who were sending emails a few days before the bankruptcy saying that FTX was fine. We have those emails. So what's going on here? To me, this is just the system. The bankruptcy system is based on pretty, I don't want to use the corrupt word, but it just feels like the left hand is shaking the right hand this whole time. The only winners are the lawyers. Yeah. And they're saying, look, it's going to cost $100 million to have an examiner. That's just an insane amount of money. If you pay 100 people $1 million a year to go over this case, what? You and me, let's say we both have law degrees and we were qualified lawyers. I feel two guys and a few assistants could go over this and cost and make a lot of money, $1 million each in a year, $2 million. The few assistants, all in, it costs $4 million. What are these numbers? Do you see what I mean by this bankruptcy industrial complex? When you see all these huge numbers being bandied about in this bankruptcy, 10 billion, whatever, you just become incredibly desensitized.
There aren't really any checks and balances because, we're getting a fee examiner, but who's checking the fee examiner? Nobody. It stops somewhere.
The judge, in theory, the judge is supposed to say yes, good, bad. Judge Dorsey has been nothing but great in this case so far. He's kept all of the creditor names redacted, unlike in Celsius. I don't like that. At least in FTX, nobody can go be like, what's Louis' claim size?
Yeah, that was a huge issue with Celsius that I think will have bad ramifications for quite a while, actually. Especially when people get money back, then people know, this person just got back $1 million. Oh, they're a target, Yeah, it's really bad.
And in crypto, you're not getting $1 million check. Some people even have their physical addresses listed on the schedules.
Yeah, it's a real mess.
They admit here in this paragraph, that the crypto rally has been incredibly helpful to them. It's really made this case. And there's still a lot to be unwound. I mean, how can you estimate the recoveries if the U.S. government has seized nearly $1 billion of the assets in the case, and they haven't said they're going to give them back? You remember the Robinhood shares that Sam bought, whatever percentage of Robinhood? Robinhood bought back the shares from North Dimensions, and that money is in the custody of the U.S. government. What are they going to do with that? Some money that the U.S. government confiscated from Madoff took 10 years to be repaid to creditors.
So you think that they're going to give, I think you said around maybe 40-45%. Maybe they'll say as an initial distribution percentage. Yeah, because then there's all these other things they need to figure out and solve, so which could take years.
So if we're paying all these lawyers $1 billion, that's 9 cents of recovery on FTX, which is a ton of money. And compared to where we were at a year ago, when recoveries were 20, 25 cents. Solana going up and all the other stuff, Anthropic, all this stuff that no one had heard of Anthropic a year ago. It didn't even have a website.
So your plan, are you going to propose something to the court, do you think, around this 25% fraud?
Writing it up as we speak, yeah. So I've been in touch with the ad hoc. I had joined the ad hoc committee in the past through my firm, and I'm writing them a long letter saying, hey, this is what I think needs to happen. And when I've really hashed out the details with my counsel, I will be blasting it on your channel. We're going to talk about exactly what I think needs to happen.
Because I think that is probably the best and most realistic thing that could happen for creditors. And I guess that's maybe just wrapping it up with what's the best case scenario right now that you could see happening? Best and realistic case scenario for customers that got screwed by this?
Best case scenario is a 2 distribution model. Ideally, we get that buffer, that 25% buffer. So we get an extra fraud claim, and then we get 2 distributions, a first cash distribution immediately, and then a set of distributions into the future, either via a recovery token or via a litigation trust, where they over time sell the Solana stake, and we get as much of that as possible. And you end up getting 125% of your claim back.
So you are on Twitter, X. We got to start calling it X now, X-Men. I will link that below. You on YouTube yet?
I'm not on YouTube. I have no ambitions to be a content creator because I don't have the talent for it.
Yeah, you do.
Well, I have the talent enough to come onto your show, but to host a show takes a whole different kind of guy, and I'd rather just hang out with you occasionally. I think that's the best move.
Yeah, sounds good. So when we hear more about all the stuff we talked about, I'll definitely invite you back on so we can just get updates.
Awesome. Thank you so much, Aaron.